Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. In today's video, I want to deep dive into the reasons we saw a big sell-off, especially in technology on August 29th. That's Friday, August 29th. I want you guys to know the real reasons, not why the media may be spinning it, but we're going to take a look and deep dive into this. So it all started with Nvidia earnings. Now you might say, well, Nvidia earnings came out on Wednesday after the close, and the stock on Thursday only was down about 1% on the earnings, and the markets overall were actually green. So you might say, well, why did that have to be, or why is that a factor in why the market sold off? And I'll tell you why. It was a chink in the armor, essentially, meaning that there was a little crack in the Nvidia earnings based on revenue numbers missing for an AI data center. So just the data centers number was slightly amiss for Nvidia. Everything else was golden. Everything else was rosy. Jensen Huang, he basically gave a great kind of speech about how great things were, and that helped kind of gloss over that one small little crack in the armor. All right, so the next factor came the next day when Marvell, MRVL, another AI play, reported earnings after the bell on Thursday. And on this report, we saw a big drop, not a good quarter at all. And so now you had a little crack, but Marvell opened the floodgates and people started to say, wait a minute, if Nvidia, the best of breed, is missing on this one number, but then these other companies like MRVL are missing by a wide margin, is there a bigger sell-off in the system, right? In the AI space? Are these stocks priced way too high for otherwise where they should be? And then to add insult to injury to the AI trade, on Friday morning, Alibaba came out. This is a Chinese company, Alibaba, about a $300-400 billion market cap. And they said that they had developed a new AI chip that could rival Nvidia's and the rest of the US sector chips. And so now you have essentially the crack that was Nvidia's on earnings for AI, opening a wider with Marvell, and then you had the Alibaba news, and the flood just ensued. And so I want to take a look at charts now, and let's go to the charts. And this is, by the way, Nvidia, and you can see this was the earnings repercussion, essentially a small 1% down day. But then on Friday, Nvidia took a 3.3% dump. Now, just looking at the charts, I have been guiding you guys that Nvidia was in a warning zone. Why? Because this upsloping trend line had broken. As soon as this breaks, it doesn't mean the floodgates open and it just collapses. It means that it has a dump, and then the buy the dippers come back in. But then ultimately, because it's broken its uptrend, the probability strongly favors the downside action. And that's exactly what we're seeing. And while you will get little bounces along the way, I fully expect Nvidia now to head back to a near-term target of around 153. And 153, by the way, is major because it was the previous high pivot before this big sell-off. And again, we went from 153 down to basically $87 on Nvidia during this sell-off. And so you have to at least expect that this high should be very big support. But I would say literally within 2 to 3 weeks, we could be down here on Nvidia at around 153. So again, that would be a pretty, that'd be over 10% sell-off on Nvidia in the next few weeks. And then we look at MRVL, and MRVL is a great chart, right? And I'm going to show you this based on technical analysis. And so you have this uptrend, right? And you can see here how when we connect this through this exact low to this exact low, notice how price was consolidating. It broke down, and then where did it go back just before they reported earnings? To this level. And in technical analysis, this line was support, right? It held price above it. It kept on bouncing, bouncing, bouncing. Once it breaks, what does this line become? It becomes resistance. And just like technical analysis teaches us, price went back into that and was rejected on earnings. And look at the drop that we saw, almost a 19% drop on this company. That is a massive drop on MRVL. And then lastly, Alibaba, folks. Here's your Alibaba ripping higher to the tune of 13% after developing their AI chip, their semiconductor chip. And again, folks, I say this till I'm blue in the face, but again, in this environment, investors really have ignored me. But anytime you have a product, doesn't matter if it's a semiconductor chip, AI chip, data center type thing, or it could be, a widget, right? But if you have 70 to 80% margins on that product, which is what Nvidia's had on their chips and other players have on their stuff, like Broadcom, every other company out there is looking to get a piece of that because the margins are so massive that the profits that they can reap are unbelievable. Then you add in the fact that the US has been like, oh, we don't want to sell our best chips to China or other countries, etc. And so these other countries are like, well, not only do our companies want a piece of that profit because the margins are so big, but we also have to develop these chips to be equally as good or better because of national security concerns. And so there's really this drive, and this is going to be something that is not short lived. Over time, other companies will develop chips that easily rival NVIDIA's, and the margins will start to collapse for the big cap semiconductor plays. And if you look historically, before the AI trade, the semis were trading at about 10 to 12 times earnings, times forward earnings, versus now 20, 25, 30 times forward earnings because of their growth. But that growth and that margin will shrink, and it's likely that these things eventually go back there. And it's not to say, listen, NVIDIA could still go higher, but there will be a case to be made and likely an outcome where NVIDIA starts to tumble sharply and probably trades at a forward PE of something like 10 to 12. All right, I know it sounds far-fetched right now, but I've been around the block since 1999 to 2000, 26 years plus of trading now, and I've seen many bubbles and many bursts, and that's the key. All right. Lastly, let's go into the chart of the S&P 500. This is your intraday, so you can see the big sell-off early. And then remember, it's a 3-day weekend here in the U.S. So then, basically the big players dumped early, and then the small traders and the algos just traded sideways into the end of the day. But if we flip over to the daily chart, the S&P has not broken down yet. It has hit 4 times here on the trend line. Fourth is a 50-50 chance of a break. In this case, it didn't break. Fifth does favor a break. So if we sell off next week and we hit this line, the odds would start to favor a breakdown below. And then again, if this line breaks, you'd expect a dip. Then the buy the dippers will come in, just like NVIDIA, right? And then we get the next bigger rollover, which is what we're already seeing in NVIDIA. And then here on the QQQ, and the Qs have been weaker than the S&P. Remember, the QQQ did not make a new all-time high the other day or on Thursday. The S&P did. The S&P absolutely made a new all-time high on Thursday. And so you can see the Qs are weaker, and because of that, it's very close. It's already hitting its 5th time, which means that this is closer to breaking. There's actually a 60% chance that this could trade below this line Monday or Tuesday, or excuse me, Tuesday or Wednesday. Monday's a holiday. And again, that would open the door to a bigger drop and likely a top. And you could even make out a potential shoulder, head, and shoulder on this pattern as well, which is a bearish topping signal on the QQQ. So look at overall, we have to watch the S&P. The S&P, again, has stayed stronger than the NASDAQ. If the NASDAQ breaks, it means the tech trade probably has more downside. The S&P is holding up better because money is going into defensive names, which are part of the S&P. Oil, gas names, drug stocks, stuff like that. Those will see the recipient of money flow as people start to exit this. But remember DeepSeek early in the year. It seems like a long time ago, but the tech stocks, especially the AI trade, took about a 50% tumble, 40 to 50% tumble on that competition. Now, it turned out to be DeepSeek wasn't that big of a deal. It was almost like a fake out, but it looks like Alibaba actually does have this chip. And regardless of whether they do or not, these chips are coming from other foreign entities, and they will eat into the sales from the U.S. to other countries, and they will be competition even for inside the U.S. over time, driving down margins. So I've just summarized here the real reasons why the market has dropped. Don't let anyone tell you that it was always PCE data. PCE data was a non-event on Friday. It literally came in exactly where forecast was. Whether or not you believe those numbers is up to you guys, but ultimately it was all about this trade here in the semis. And the semis, as the old adage says, where the semis go, the market follows. Semis took a dump. Market took a dump, led by technology. All right. Again, hope you found this useful, folks. As always, I try to bring you pure charts, no BS, what the reality of the situation is. And again, that's what we do here at Verified Investing. Come check out our swing trade services where I give out my exact entries and exits, videos almost daily, beautiful stuff here. You can get stocks and ETF swing trades. We have another service for options. We have another service for commodities, another for crypto, and a day trading room, LDTR, the live day trading room here for if you're interested in day trading. Come check us out at verifiedinvesting.com. Take